Good evening and welcome to Deal Flow, the show where we keep you informed about the latest merger and acquisition trends in South Africa and Africa. We talk to investment bankers, financiers and CEOs on the buying trail. My name is Erika van der Merwe. In this episode, we take a look at research and data house Mergermarkets' quarterly update on global merger and acquisition activity. Now, encouragingly, the theme worldwide is one of a pickup in deal activity, albeit a cautious one. Now, first, a quick look at our deals of the week. South Africa's Met Investments plans to increase its presence in Europe by buying the largest lead-acid battery manufacturer in Turkey. The manufacturer of automotive products said it has concluded an agreement to acquire all of Turkey's Mutlu holding, as well as 45% of Mutlu Plastic, which will trigger a mandatory offer to minority shareholders. Vodafone intends to increase its stake in its Indian subsidiary after the country cleared foreign companies to take full ownership of local carriers. The British company will seek approval from the Indian government to buy stakes from minority partners. Vodafone has yet to decide if it will buy out all partners. Britain's biggest privatisation in decades captured the imagination of the public there. 700,000 individuals have applied for 7 times the number of Royal Mail shares on offer to private investors. Despite the threat of strike action from delivery staff and criticism from the opposition Labour Party, the UK government is close to completing the controversial disposal of a majority stake in the company, which is almost 500 years old. Walmart and Bharti Enterprises are breaking up their Indian joint venture, leaving the world's biggest retailer to go it alone in a country where it has struggled to build a bigger presence. Walmart will take over its Indian partner's 50% stake in Bharti Walmart, which runs 20 wholesale stores under the Best Price Modern Wholesale brand. M&A activity in Africa and the Middle East is growing steadily, according to Mergermarkets' latest quarterly report. The value of M&A activity in these regions during the 9 months of the year have already matched the full-year deal value for 2012. In studio with me, Alastair Billing, Corporate Finance Manager at BDO. And crossing from London, Kirsty Wilson, Global Research Editor from Mergermarket. Welcome to both of you. Kirsty, I'm going to start with you because all Mergermarket reports, you look globally, of course, as well as by region. If we just look at it from a global perspective, we're seeing a steady increase over the past 3 years. Now, how would you describe that increase? To me, looking at the graphs and the numbers, this is a cautious increase rather than a euphoric one.
Yes, it is very much so. The last few years, if you said it's been quite flat with deal value, and this year it's only just been at the end of Q3 that we can see that the deal values compared to the same time last year are actually up. We didn't see that in Q1, we didn't see that in Q2. But I think more positively, the sign at the moment from 2013 is each quarter has shown an increase. So that momentum to start increasing that deal activity is starting to show.
And Kirsty, to put it into further perspective, where we are now for 2013, how does that compare with the peak, which I think was in 2007? How far are we from reaching that sort of level?
We're still quite far off, and it's not likely to be anytime soon that we're going to see that kind of M&A activity, but you know, that was quite an exceptional year, so whether we want to actually see it that high again could be quite risky anyway. But I think for this year we're at least going to match, if not surpass, last year, so we're likely to be the highest value year since 2008.
Alastair, if we bring it home to the South African and the regional experience, what sort of trends have we seen here over the last 3 years? We know there's plenty of caution that prevails here too, but alongside that, there's the enormous structural opportunity on the African continent.
Oh, without a doubt. I mean, if you look at Africa, it's got a GDP of over 5% over the last few years, and I think that the international firms, they basically, if they're targeting emerging markets, they know they have to be here But as you said in your intro, they are still very cautious. There's still a lot of risks on the African continent.
So Alastair, you're referring to the caution, but what we're also seeing, if you look at the Mergermarket data on exit multiples, and Kirsty, I know you can corroborate this, your exit multiples that you measure are the lowest on record for you on your book. So Alastair, what would you say are the driving forces of those low exit multiples, so the price earnings ratios that we're seeing?
The reason for the low multiples, especially on the local front, would be that private equity firms are sort of the most active at the moment, and as you'll know, a private equity firm has a much shorter investment horizon than a company trying to buy another company in the same industry. So in our experience, we see the private equity companies sort of undercutting and offering very low prices at the moment. But in terms of, it's a two-way street, because on the deals that have been the most successful for us so far have been actual companies going to buy companies in similar industries. The reason for this is that they see the immediate synergistic benefits, and there's quite a lot of competition to snap up and gain footprint into Africa.
Kirsty, moving to the Middle East African data that you're capturing, so you also look at the numbers by region. So it's the second year of increased deal value that we're seeing for this particular region. And if we take out the Africa component, which I think is just over half of the Middle East Africa region, we're seeing a 75% year-on-year increase for the first 3 quarters of the year. So I'd imagine there's one or two outliers in those numbers, but what's the underlying trend? Is it good?
Yes, it is growth, but I think Q3 in Africa mirrored that of the global trend. You know, there seemed to be a lot more confidence and a lot more of the larger deals that were made. We can see that in the top 5 deals that were made this year have also entered into the top 10 deals ever to enter into Africa. So we're seeing that, you know, that growth potential is there, and gradually people are becoming more willing to embark on those bigger transactions.
And by sector, Kirsty, what are you seeing? So are those mainly resource type of deals and related sectors?
We can see from the highest value deal this year, the Morocco Telecom stake that was acquired for 6 billion. That was in the telecommunications sector, and Mergermarket intelligence shows there's still a really strong pipeline of telecommunications deals that will follow into 2014. The mobile telecommunications market still has to undergo a lot of development, but there's a lot of potential there in Africa at the moment. I think also when it comes to cross-border activity, Asia is still hungry for the resources that Africa has on offer, particularly India and China, with some really big deals that have been made this year. And Asia's investment has really overtaken Europe in that competition already this year.
So very interesting what we're hearing, Alastair. So confirmation that it's outsiders and interestingly emerging market sourced capital coming into Africa, seeing the value of the resources deals and perhaps where some of the other players are a bit nervous of this market.
Yes, most definitely. So it's the BRICS nations, including South Africa. I mean, we just heard China and India particularly. On our side, we have seen some interest from the USA as well as some from Europe, but I think they're far more conservative in their approach, in that they don't have as much of the appetite and they don't understand the environment as much as the BRICS.
You talk about appetite. Are these BRICS players who are doing investments in Africa willing to pay higher prices too, compared with the developed market investors?
I wouldn't necessarily say that. I mean, going back to my point earlier, the developed market knows that they need to get into Africa, and they know that South Africa isn't offering that growth anymore. But I think in terms of your question, the companies in emerging markets and the institutional investors there and so on, they are sitting on a lot of cash because of the growth they've experienced, and they're just trying to now diversify as well as increase their overall return.
Kirsty, you referred now to inbound activities, so India, Brazil, China, etc., bringing capital into the African continent, recognizing opportunities here. Outbound activity, though, so from Africa outwards, seems to be low. Any ideas on what that suggests? Is capital within the region still focused on local development?
Yes, as you said, outbound is still quite low, and I don't think that we'll be seeing anything remarkable happening in that space just yet. But you have South Africa, for example, that's really trying to branch out into other countries in Africa, such as Nigeria. Mergermarket data shows that actually South Africa moving into other areas of Africa was the highest by value and volume last year. This year as well, it was recently announced that Africa has raised a record amount of debt already this year, and that money needs to be deployed somewhere next year, and we can only hope that that will be via M&A.
So Kirsty, what you're saying is while outbound activity from the region might be low, intra-regional flows are fair to strong and picking up?
Yes, definitely.
Alastair, so what trends are you expecting? So we're seeing a pickup, so gradual pickup. So we've got those cyclical recovery in global market sentiment, so a cautious pickup in deal activity alongside, as we said earlier, the structural opportunities in Africa. What trends are you expecting in terms of momentum, but also interest in particular sectors? So resource is still playing a role, but there's still the emerging middle class and then the consumer-related deal making that goes with that.
Yeah, as we said earlier, it's picked up every quarter this year, if I'm not mistaken, and it was a very strong third quarter. We would definitely expect that momentum to continue into the last quarter of the year and going forward. And as you said, yes, I mean, it's resource driven and the related infrastructure primarily from both government and companies putting in the infrastructure. But in terms of median household income, there's been a great increase there, and all the knock-on effects, and that comes back to healthcare, financial services, everything across the board. But I would say resources driving infrastructure will be the main growth factor.
Kirsty, the final word from you. I know it's dangerous to look at the numbers and extrapolate from there, but you've looked at the numbers for some years now. Is there any trend that you see, and your expectations for the final quarter of this year in terms of M&A activity in Africa?
Well, a trend that we can see since 2010, which was the last year that we saw that was very high value. There's only ever been one quarter that posted double-digit growth, or double-digit value, sorry. So in Q3 we saw 16 billion-ish for Africa alone. So we'll wait and see whether Q4 will buck that trend or else continue it.
Kirsty, thank you very much. From London, that was Kirsty Wilson, Mergermarkets research editor, and here in the studio. Alastair, thank you very much to you. Alastair Billing is BDO Corporate Finance. He's a finance manager there. From me, Erika van der Merwe, thank you for being part of the show. Do tune in again next week for an update on deal flow activity in South Africa and beyond. Goodbye.